It's time for the big three. Three stocks, three charts, three trades. Rick Ducat will take us through the charts. Here to take us through the trades, Aquiles Larrea, founder, CEO, Larrea Wealth Management. I'm so glad you're both here today. Aquiles, just maybe a big picture here as we go into the rest of 2024 after the best month of the year for stocks in November.
Yeah, we could have had what we're looking at here. We could be having a slight pullback. I don't think it has any legs, though, at this point. I think we're heading straight up. We're going to keep making money at this particular point in time. If there is a correction, probably going to be in the latter half of January, not really believing that at this point, because there are no conditions showing that we're going to go into any serious correction at this point. But anything can happen. We're seeing a little bit of a pullback today. But overall, the market's positive, positive, positive. Earnings are decent. Margins are good. We just have to see how it goes from here.
All right. First up, you have FedEx here today. What a choppy chart this is over 12 months, though it's been on a recent upswing, let's say since September. Some of your thoughts on where this could be headed and why. It's at 296 today.
Yeah, we think that this is a conservative play. I mean, we've seen it go higher, looking for it to go up about 9% in a 12-month period. We usually say 12 to 18 months, but I think it's going to happen sooner with FedEx. We also see excellent management, good operating margins. We also think that we're going to continue to the upside. The sector's favorable. This is their time of year, if you think about it. Christmas is one of the busiest seasons. I worked at UPS back in the days, and let me tell you, this is as busy as it gets.
Right, this is their time, right?
Absolutely. So this is, moving forward, I think that FedEx is one of the stocks that's going to really perk up in just the next 3 months.
All right, let's see what Rick Ducat has to say about the charts, please, Rick.
Well, Nicole, you said choppy. That's really a good way to describe this chart, because when we start looking at it, you can see that there's some very large, very noticeable gaps. You know, as is often the case, most of them are around earnings here. So you can see that we had some big swings to the upside and the downside. But when you kind of look at it a different way, largely, we've stayed within the boundaries of this triangular shape here. You can see one trend line starting at the highs, one trend line starting at the lows, converging toward each other. Now, we are in a rather interesting situation because we are pretty close to breaking out of that upper level here. However, we failed at a repeated ceiling, kind of this resistance zone between our red line and our pink line, 300 to 305 or so. We have fallen below that area. We are staying within the boundaries of our blue dashed lines here, our upward sloping channel. And you can see we did kind of accelerate to the upside. We had this more narrow sloping yellow trend line has given way to this steeper blue channel that we've been in. RSI actually looking a little bit worse than price. We saw a little bit of bearish divergence here in terms of our RSI study. Now we are breaking through that green trend line here, heading toward the 50 midline that separates bullish and bearish momentum. So beware of a break below this supportive area and for RSI to break lower. Now, if we were to zoom in a little bit, we can see that the key areas here, well, like I said, our resistance zone, 300 to 305. Then our +1 standard deviation channel comes in just below 310. So nice even $5 increments to keep an eye on there. To the downside, yellow 21-day EMA, yearly linear regression line, and our green line, our support and resistance line from the past year, all come together near about 290. So that would be a support zone to watch.
Okay, great. Thank you for that chart. I mean, he's watching, obviously, resistance, support areas, talked about the choppiness that we discussed. Final quick thought. I mean, you see the upside there. Would you say the same for UPS, or you're more of a FedEx guy?
I think the sector is going to benefit overall. Yeah. This is their busiest time of year. They make a lot of money this time of year. But we also think, just very quickly, that this sector is positive overall with the growth in e-commerce and the like.
Okay, next up, we're looking here at Apple, which is at 240, hitting new highs, 240.79, the new high here. So an exciting time for Apple. Hit that today, folks. New highs. Year to date, it's up 25%. A great performer for Apple. There's still more room to run. What's the catalyst?
Yeah, absolutely. You know, the stock's been on a tear recently, and it took a break, and then it started moving back to the upside. This is one of those stocks that, it's a leader in its sector still. There's still a lot of new products coming out. They're starting to get into the AI area. We're looking at them to grow another 12 to 14% in the next 18 months. That is not a conservative move. That is an aggressive move. We think they're going to keep making money in that sense. We also have the holiday season upon us, so we're going to see that go up as well. We believe in good profit margins, good operational team. So overall, we think that Apple has still a lot of room to run at this point.
Wow, all right. That's some positive commentary there on Apple. Rick Ducat, some of your thoughts on the charts, please.
Yeah, moving higher here. And, the chart is an interesting example, too, because when we look at it, we can see that, it seems to be a pretty good example of an ascending triangle type shape here, but with a bit of a twist. So here's our trend line going up across the lows. You can see just nicely making higher lows with each successive decline here. So kind of just, trending upward. And then we also could consider our triangular shape here. Instead of one area of horizontal resistance, we kind of have a zone here. We topped out repeatedly at around our red line near 233, but we also broke through a couple times and tested an upper extreme near about 237. So like a $4 range there would be the resistance zone. Either way, though, we're breaking above it today. We're making new highs. We are pretty close to the highs of the day, so looking pretty decent so far. 240.79 is where the high point came in today so far. RSI also following suit, breaking out of this downward sloping trend line here, a longer term red trend line on the RSI, not quite at the overbought area yet, that threshold of 70. That is what the bulls would want to cross above, typically regarded as a sign of strength. So now if we were to look at our volume profile study, we can see that there's big volume here. Near about 228, 227 or so. This is a heavy trading area, which makes sense because of how long we were rather sideways in that general range here. So that's a supportive area to watch here. And there's also other things that kind of coincide with that same area here. We've got our trend line, our orange 63-day EMA, and our yellow 21-day EMA. So we could kind of broaden it out a little bit more. 225 to like 230 or so would be an area to watch. Then our resistance zone now becomes more of a support zone. Finally, +1 standard deviation channel around 256 could be an upside area to watch.
Okay, so we'll watch that on the upside. Is that an area you watch on the upside?
Always.
256
Absolutely.
plus whatever else you're watching, right?
Absolutely. I think that's conservative. I think we're going to make a lot more money than that at this particular point.
All right, so that's a conservative call plus the opportunity to move higher. And then there's NVIDIA, the darling of NVIDIA. I read earlier that Jensen Huang was offered a CEO role back in, I think it was 2013, to be CEO of something else. Maybe it was 2013 or 2016, but didn't take it. Good thing for him. Right now, we saw the stock up 180% this year, came off the highs of 152 recently. Some of your thoughts on where this could be headed?
Yeah, I think the stock is going to probably pull back at some point, but not a serious pullback. It's along the lines where plenty gas in the tank right now, moving right along, but maybe it hits some traffic and it's stop and start, but continuing on the positive trend. This is a stock that has become not only a darling, but it's a real play here. I think that, versus of the dreams of being in another place that didn't make as much sense, everybody's kind of hopped on the bandwagon, and It's making decent money as we go along.
So you still like it?
Yeah,
right?
We're going to make probably double digit, 15 to 20% in 18 months.
Wow,
we also think that this stock is going to be, there's talk that this stock is going to hit new highs. We already see that happening, but we believe it's going to continue to happen now through January. So we may have to go back now, like I did on a few stocks this year, and say, hey, we need to revise our upward price targets.
I mean, the year, I don't think anybody would have expected this year that we saw with the new highs. Even November, that came in as the best month of the year, just finishing so strong here. Let's see the NVIDIA chart, please. Rick Ducat, what stands out to you? Because he's seeing 15 to 20% upside potential here for new highs.
Oh, sure. Well, I mean, anything could happen with a stock like this. It's such a large part of the market. It's so big and so important here. And when we do look at the chart, though, a little bit of a slowdown recently. Once again, kind of we had a ascending triangle type shape here, much like our Apple chart. Not exactly the same, but once again, kind of exhibiting more of a resistance zone here. You can see we kind of had these highs kind of between our light green and dark green lines, 130 to 135. Coincidentally, just being, nice even $5 increments once again here. More recently, though, is where perhaps some cracks are starting to show because we have our rising wedge shape between our two blue dashed lines here. We topped out around this area. Notice that we saw bearish divergence on the RSI. Price was making new closing highs around this period here, but not really following suit with the RSI. RSI was actually trending downward a little bit there. So a situation where we're losing steam in terms of momentum, not really what you want to see, but also, we've had such a rally, such a run here. Nothing goes up forever. A bit of consolidation might make sense at this point here. But you can see we held the line at our support zone, which also contains our orange 63-day exponential moving average around 134 or so. Now, I'm kind of wondering, it almost looks prime for a breakout. Look here, because we held on to our green trend line. We are below the 50 midline on the RSI, but we are very close to crossing above both the 50 midline once again and that short-term downward sloping steeper red trend line, as well as our yellow 21-day EMA. So we could get a push to the upside if we start to break through those things. If we were to look at our support and resistance here, we can see our blue linear regression line, our yearly line of best fit, 148.92, so about 149, the +1 channel, +1 from that area, one standard deviation, 178.60, that could be one area to watch in the shorter term. Then we've got our support zone between 131 and 135 to keep an eye on.
Okay, thank you for that, Rick. It was great to see you in all these charts. Final thought, Achilles.
Yeah, we have to remember we'll have a lot of positive wage growth happening here, low turnover when it comes to unemployment, and we're also seeing continued improvement on inflation. So we have to keep that in mind. These are all positive signals for the stocks that we own that we should see the market continue to go up. Yes, there will be some consolidation, but at the same time, I really think we're heading into this Christmas in a rally mode, and it might pull back a little bit in January.
Yeah, you mentioned the second half of January, maybe for the most part feeling more up, more bullish today. Thank you so much, Achilles. Great to see you. Aquiles Larrea there, and Rick Ducat on the charts looking at FedEx, Apple, and NVIDIA today for the big three. Thank you both.